If you've been watching the market at all today, you know that precious metals, silver taking the biggest hit, gold being also a really big loser in the double digits, and even copper, palladium, you name it. But there are reasons as to why I kind of saw this coming and why I do believe we still have yet higher to go for precious metals, but you need to understand what happened today that made them decouple from the rally they were going on and why they decided to cool off. Remember, as always, never financial advice, just trying to put you guys on the plays that I am in. If you're new around here, smash the like button and also consider subscribing to the channel. Spot silver today fell during intraday trading minus 35% in a 24-hour time period, dropping below $75 an ounce, on track to its biggest decline in 46 years. The chart is absolutely scary, as we saw capitulation candle after capitulation candle making people panic, and it caused one of the biggest sell-offs in silver's history. If you look at silver's price right now, it's at $85.25 after rallying to almost $120 per ounce. Now, guys, I hope that some of you watching maybe looked at the video that I posted, my 5th video on the channel. I said, watch this video before buying silver in 2026. And in the video I mentioned, what we are seeing right now is an unprecedented parabolic rally for precious metals. People are flocking into silver, they're flocking into gold, and at the expense of what? Of dumping their positions in stocks and also their positions in crypto. And we saw this, and it was outright obvious. We saw Bitcoin go from $126,000 per coin all the way down to $80,000 right around now. We saw the S&P 500 starting to kind of consolidate and break its rally that it was seeing through 2025. But again, the big thing that we saw was retail investors, mainly through FOMO, with China-related narratives of why they continue to increase their gold and silver reserves. Shanghai silver always running a $10 to $15, $20 premium some days against the US-based spot silver that is traded on the markets. But the fact is this is what happens when retail chases anything. It dumps no matter what because people will aggressively start taking profits. And guess what? You might be one of those people watching right now that bought in at $115 thinking that it's going to be the next $500, $1,000 asset. That sure can happen, but you have to remember, if we look at the price action overall and over time, over the last just even 13, 14 years, silver went from $33, dropped down to about $15 a share, and kind of is an asset that runs sideways. People started believing that the big financial collapse was going to happen, the dollar's debasement, the dollar losing its value. And then we're seeing things like, oh, the stock market is overpriced with the PE ratios, which I talk about on this channel mainly is stock related news. But for me, again, it's just, you never, ever look at a chart like this and believe that this is going to just keep on going up forever. So a 35% down draw might look like a big deal, but if you look at the 1 month, silver is just still, if you look at even the 5-day, let's just call it the 1 month. We're back to January 13th pricing. So basically it wiped out 17 days worth of gains, but on the monthly, we're still looking extremely bullish. So is it a better time to buy silver now than at the top? Surely. Can we retrace even some more before we rally back to an all-time high? I mean, it's possible. We can maybe even get down to somewhere in the $70 range where we once were at the beginning of the month. But again, never chase parabolas. And I'm just going to make sure to tell you guys, whenever you see a chart like this, be scared, be fearful, because people are getting extremely greedy thinking that money is free. But there are people out there, short sellers. There are people out there that are seasoned investors in precious metals for the last 2, 3, 4, even 5 decades that know what they're doing. And when they see this kind of run up, they're going to be aggressively taking profits on our heads. Now, let's talk about why silver actually dumped when it comes to news-based catalysts. Silver's price just experienced a gut punch, the steepest one-day percentage decline in roughly 41 years, not 14. After an extended rally that sent the metal to a multi-year high, futures plunged sharply, breaking key support levels and triggering a wave of selling as traders rushed to lock in gains or cut losses. This is the saddest part, is I know a lot of people did actually cut some losses because I know people were FOMOing in the last few days. Investors attributed the rout to a mixed factor. Extreme profit taking after a recent run up, crowded long positions getting squeezed, and basically it reverses. Instead of a short squeeze, it kind of just causes a long squeeze to the downward pressure. Look at that chart. Absolutely gut punched, as it said. And heightened volatility and rising margin requirements that forced leverage traders to exit in masses. In plain terms, the market got too hot too fast, then flipped hard when buyers stepped aside. But the best part about these kind of reality checks is it makes you realize assets like these, or assets like anything, will never, ever go on a parabolic run forever. They will always have opportunities for corrections. And that's when smart investors like you and I are going to be buying the dip. It's much better to buy silver right now than buying yesterday, buying the day before, because it's been on this really unprecedented run up with people believing that this is going to be how we start buying goods and services through silver stacks and gold bars. But that's just not the reality that we live in. For the financial system to collapse, that means the whole world would have to be hurting a lot more than it is now. And I'm talking global related issues that could really cause those kind of things. Why the plunge was so severe: overextended positions. This is where you need to make sure you're careful and never overextend. Never ever leverage trade. That's my number one rule. I will never use anybody else's money to invest. If it's my investment, I want it to be my money. I'm not going to use 50x from Robinhood or from Webull or from Gemini, whoever it might be for stocks. I'm going to be using my own money. Many traders piled into silver on expectation prices would keep climbing. So when prices flattered, stops and margin calls cascaded through the market, accelerating the drop. Macro shifts. A stronger US dollar and shifting expectations about monetary policy reduced the appeal of precious metals as an inflation hedge, dragging silver down alongside of gold and other commodities. Let me say that one more time. A stronger US dollar and shifting expectations about monetary policy reduced the appeal, because that's what the announcement was made earlier today from the new federal chair that just got appointed by Trump. And he said his focus is getting the dollar stronger, and again, not focusing on really cutting rates as people were expecting for rate cuts that was maybe going to cause the economy to kind of go downhill. So macro shifting, overextended positions, and the most important thing to realize is there's still a lot of issues. This is per Polymarket that I saw over on Twitter. It's saying US bank failure by January 31st. It's currently sitting at a greater than 99% chance. I don't know if this is what they are trying to, failed bank list and FDIC. So I don't know if this means there's certain banks that are looking like they are going to be failing, but of course, there is still some stress in the financial system that should be scaring each and every one of us. It's not stable. It's not the safest place to be, but I'm hoping that we see a really nice reversal for the entire market once there's this transition in May from Jerome Powell to Kevin Warsh. He's going to be taking over as the new Fed chair. He's a very young individual that's very pro equities, pro crypto, pro investment assets. But we'll see how that impacts the silver and gold industry. But the most important thing right now with the macro shifting and overextension, again, it's just cooling off. I don't think it's the end of the world and silver's not going to zero. It's not going to go back down to $15. I just don't foresee these things happening. But it could retrace quite a bit of some of the gains that it got in 2026 as it had a really insane day. But also, gold price, don't forget, had a retracement as well. Almost identical at $5,600 per ounce. It dropped to $4,900 per ounce. And we'll see if this correction lasts long, or will traders buy it right back up after the liquidations have occurred. I don't even want to talk about how much money was liquidated, because I know it was in the multi-billions of dollars of money that was lost to greed. Never be greedy. When they panic, we pounce. When there's greed in the market, we are fearful. We're scared, we're profit taking. I appreciate your support as always. That's all I had. And until next time, as always, everybody, keep investing. Peace.